following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Disconcern the truth. The problem with making assumptions is that we believe they're the truth. We make an assumption, we misunderstand, we take it personally, and then we react by sending emotional poison with our word that creates a whole big drama for nothing. Market-wise, let's take a look at it out here. We have the Dow Industrials up 11, NASDAQ up 33, S&P's up 7.5, gold contract up $15.90, trading at $13.35.90 an ounce. Silver up 37 cents, $16.71 an ounce. Silver finally caught a bid. Thank God for big and small miracles. Copper trading at $13.13 a pound. Light sweet crude, $62.56 a barrel. Notes and bonds. You get the 10-year note flat, 120.01. 30-year bond up 9 ticks, 143.12. King dollar down 441 ticks, trading 89.600. That's going down with volume expanding. We got the euro trading at 124 to 1 U.S. dollar. The yen is out here at 106 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, we got a market that wants to test a couple different swing points. You get contraction of volume. And what that's going to set up, folks, is a ride downtown into this February 9th high volume low. So, SPY out here, up 67 cents right now, 53 million shares, and yesterday we did 97. So what you're going to see here, bottom line, we've been down on volume. You get the counter trend bounce, the first bounce up on light volume from February 9th going all the way to February 27th. Back down on volume, and now you're going back up on light volume. On the SPY, I expect that the high of the 27th is going to get tested. That number is 278.92. NDX 100. Now, this is the baby, because this is going to get intriguing here in the NDX. NDX right now is trading 69.09. The high is 7,022.97. So, bottom line, you know, that's pretty easy to get. The high, that was the first high. Second high in the counter trend bounce on the 27th was 7,003. We're at 69.09. I do expect that we're actually going to get through the 7,003 and get into the 7,022, because that would make the market just deviant enough, you know, that you get up to that high. We'll see whether it gets over the high, see whether you have a failure on price and failure on volume. The way we're contracting, it's telling me we're not going to make it, meaning on the volume. I suspect we're going to make it on the price, because that's just deviant enough. The markets love to do that. On the Qs, what you're going to see is this. The Qs did 38 million today. We're 22 right now. That's going to be lucky to do 30 million. Bottom line, you're going into 68 as well as 118 on the way down. On the first leg down, second leg down, 42 as well as 76. So you can see the big numbers. The IWM looks like it got some strength in it. The volume's contracting. But the IWM looks like it's going to go further on this bounce than it did on the first bounce coming off the February 9th level. The first bounce got the IWM going to 155.88. Well, we've already traded 155.16. You got it contracting. What that's going to set up, that's going to set up at least a test of the low of the high, which is not, we're not that far away from it. That would be 158.40. Gold contract. What do we have with the gold contract? We caught a bid. So bottom line, gold has done everything that it actually technically should have done. Well, not necessarily should have done, but it acted correctly. That's the bottom line. Threw everyone a curveball. You know, goes higher, pulls back price-wise. Takes a deep dive last Thursday, but guess what? Bottom line, that was coming into monster volume on the break top side on December 29th. It gets another bid. Bottom line, now we're going to be marching up to the 1370.50 level. That's the high of the 25th. Now, that level, we just missed the high. So the high is 13, well, let's see. This is interesting. So in this contract, what happened is that this contract did take it out by 50 cents. You got to remember something. The futures contracts always roll. So this took it out by 50 cents. What we'd love to see, what I'd like, if you're a bull, what you want to see, folks, is this. You want to see, we're at Tuesday, you get to Friday, right? Bottom line, by Friday, this could blow this away. If it was going to do that, we'd have to get up somewhere into the, like, 1358 area, and you'd want to build a couple days of cause. The more, if we go right from here and go after it again, probability-wise is that, you know, you'll make it, but you'll probably fail again. Because, remember, we started right from 1303. 1303 to 1370 would be quite a run in the 5 or 6 days. If we build some cause underneath this high, then you have got big, big action. That building cause is really important under highs or if you're going after lows. Silver caught the bid out here today. That's up 2.3%. And we get big volume. We get 91,000 contracts. It's a big number. Silver right now, 1673. I'd say silver's going after the 1778 level. And we'll see what kind of juice and how long it's going to take to get to that level. The 10-year note out here is flat. Now, this baby looks to me like, number one, it wants to go higher. Number two, the real question is going to be, you know, let's see. No, I got to go to the next contract, TYM. Okay, we're on the June contract right now. So you got 1.2 million contracts. It's a nice setup. This thing's a setup that, number one, it can go get up to 122.02. The way this is actually set up, this could get up to 123. And if that's what we get, that is going to be one heck of a counter trend bounce. Because thus far, bottom line is that we'll see whether this thing wants to go higher. I'd say at the beginning it's going to be a counter trend bounce. But if we get juice inside it, guess what? That thing can go. 2.8% is what the 10-year is trading out right now. We go over to a good old King Dollar. What you have with King Dollar is this. King Dollar right now has, okay, DX. We're still on the M. So let's see, DXM8. Where are you? There we go. So, no. Yeah, you stay right there. We'll be coming right back. 877-927-6648. We have the Dow Industrials right now down 10. Nasdaq's up 28. S&Ps are up 5. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 32. We get the Nasdaq up 24. S&Ps are up 3.5. We go over to that gold contract. We take a look at that gold contract. So gold out here, we're on the April contract. You've done 265,000 contracts. You have the price spread. You get the volume behind the move. Okay, so now you're deep into the higher range, which is pretty cool. So the way that this baby goes, so if we take a look at this, what you're going to see is this. We had the big sign of strength on the 14th of February. We go from 1319 to 1358, do 32,000 contracts. Tops out on the 16th at 1364, pulls back down to 1303. Big number, 1303, no doubt. Now, it does that 1303, by the way, at 422,000, which is as close as you want to get on the way down. Didn't break a swing, but bottom line, did have the expansion of volume, rejected it. Going topside again, this sets up that you're going to get a run to test that 1370. The real kicker is going to be, can it go break out this time? So if we go back and we take a look at gold on a much longer basis and use the continuous contract, what you're going to see, I'm going to put this on a 3-year weekly. So what you're going to see here is that we've been hanging here since July of 2016. Your first leg up December of 2015, we went from 1,050 up to 1377. You pull back to 1123, which was on December of 2016. Now, this is where this gets pretty cool, because what happens is this, is that, you know, we went from 2016, a lot of building cars in the middle of it, of July of 2017. We get up to the price point of the 1358, and then we pull back in December of 2017 to 1236. When you take a look at this, this is what the difference is between 2015, 2016, and 2017. The amount of pullback was very shallow. So your probability does get better that we can take this high out, particularly because we've been up here 3 times thus far trying to get into that 1358 area. Now, the 1370 is not that much further, 1377. If we take that out, now I'll bring this up a little bit more, and you're going to see the type of action you can get. The reason being that the action would be pretty incredible if you take out the 1377 is that we've been in this consolidation since June of 2013. So you get something like that, then it's going to crawl all the way up. I mean, your next swing point up there gets into 1602. So it's a good number. Of course, the high out there is in 1920. Let's go into the silver contract, and we'll take a look at silver the same way. Now, silver finally caught a bid out here today. SI1. So SI1, we'll take a look at the continuous contract. Pull that back. Where are you? SI1. Do it that way. There we go. Okay. So, $16.71. We bring this back. Okay, so silver's been in this consolidation since June of 2016. Now, what's intriguing is that when you actually bring this back, this is pretty cool. One second, let me get it to 4 years. See, what you're going to see here is that, you know, silver, we've been waiting for it to get a bid forever. But the way that it is set up, it never really broke down. You know, it would have to close. When silver went topside April of 2016, it took off like a rocket ship. It went from $15.30 up to 21 bucks. Had one deep retracement in between it. And we've been going against that strength now for, yeah, a year and a half. Now, the cool thing is that is the building cause, and each low has rejected lower price. That's a decent setup that it can actually go for it. You know, what it hasn't done, let's see, so we go top side, we bring it down, we go top side, bring it down. Yeah, so we want to see, I want to see a nice big sign of strength here. That's how this kind of shakes out. Because the way that this is set up right now, you can't really, because we went so far, so long sideways, I can't really say there was a decisive break top side. There was June of 2016. So we'll see where that baby shakes out. Now, if we go to the dollar index, because it's going to be all about the dollar, and we flip that around and we put that on a continuous contract, what you're going to see, and the dollar has 31,000 contracts on the way down today. So you're talking about some big numbers here. The dollar has already broken, you know, the consolidation that was in from January of 2015 through July of 2017. And you can see when you're just looking at this, now I have this on a 4-year, I believe. When you're just looking at it, it's like, okay, you're at 89. It looks like it can hit 80 in a heartbeat because we went up so high in July of 2014 till March of 2015. It was a straight line move. But now if I bring this back a little bit further, what you're going to see is that what is saving the dollar right now is the highs of 2008, which is 89,250 approximately. The highs of 2010, which is 89,880. You can see, you know, we've been down here right now about, we're going on the 3rd month. Now, it's like anything else. The more you keep slamming into that high, the higher the probability is you're going to break it. When I look at the aspect of where gold is, where silver is, where the dollar had already broke, if you just take the price projection from the large break, which is 91 at the bottom, and I'm not going to take the very top, I'm just going to take the 100 at the top. That's $9. You can take 9 off the 91, and basically that's how you get an 82 price projection. That's not even talking about the ABC down. We do have a confirmed ABC down with an 82,380 handle on the continuous contract. So you start putting those together, bottom line, that's where I suspect we're going to be going. We take a look at the GDX. GDX had a nice rejection of lower price last week. You get some juice behind the GDX today. That's saying the GDX wants to run to 2486. Right now, you're at 2210. XAU, HUI, they're lining up also. XAU is up $1.86 today. That's lining up to run into the 92.94. You're at 80.96. Gold Bugs Index, which had to get back inside the range and did today. We were talking about this yesterday. The range you had to get back inside was 174.97. And what you got out here, we're at 178.46. So that came along, came right up. 209's the number. And right now you are at 178. So you start putting all these together, bottom line, those metals look like they want higher price. If we go into the commodity market and just take a look at the commodities in general, natural gas, that's up, let's see, 1.6%. You get orange juice up 1.4. Gold's up 1.2. Copper's up 1%. Corn's up 0.2. Let's see, cotton's taking it on the chin. That's down 3.2%. Lean hogs are off 0.8%. Some of the higher volume stocks out here, and this is going to be a low volume market out here today, folks. Let's go look at the S&Ps. Inside the S&P, you have Micron Tech. That's been on fire. That's up $1.77. GE's up 20 cents. You have Microsoft down 52. You got Applied Materials up 235. NVIDIA's up 565. Qualcomm is off $2. Stay right there, folks. Coming right back. Our phone number is 877-927-6648. The Dow's up 15. Nasdaq's up 34. S&P's up 8.5. I'll be right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We have the Dow Industrials right now up 12. The Nasdaq's up 35. S&Ps are up 8.5. If we go take a look at the inside the NDX 100, the strength out here, you got Mercado Libre is up $19, 5%. This is the big South American internet stock. This is a big number. Let's take a look at this for a second. This is out of Brazil, I believe. Yeah, this is breaking topside. Has juice behind the break also, which is pretty intriguing. So let me see this for a second. So Online trading for Latin American markets. The company's website allows businesses and individuals to list items, conduct sales, purchase online. It's a big number, $410 stock, and that baby has juice behind it. We go take a look at the Lam Research is the number 2 mover. That's up 4.7%. You get AMAT up 4.2%. Taken away from NDX 100, Qualcomm's down 3%. You get Charter Communications off 2.5. Vertex Pharmaceuticals off 2.3. Let's go over to Lam Research. So Lam's up $10. Big number there, no doubt. This has been in a big consolidation since it came down hard. This thing came down hard in December. So it came down from 215 to 180. They didn't make their numbers. So this is going to be intriguing watching this one. The reason being is this. So first you had a high volume low when it first came down December. That high volume low was $180. Made a nice counter trend bounce. It went from 180 all the way up to 218, $38, right? Falls apart again. Has a high volume low now, 8.7 million. Now this is one you want to watch like a hawk. The reason being is that this is going up with lighter volume. Not bad, but still lighter than what it's going into. And I suspect, number one, this is going to go test its highs too. The differential is that what you're going to see is that when you line this up, you get those highs where volume has been light. You come off the highs with volume, and you get a monster consolidation. The top being 215, the bottom being 156. That is one huge number, man. Let's go take a look at AMAT. So AMAT is a winner out here today. Yep, AMAT's going after its high volume high. So see, AMAT has a high volume high at $60.89. We put this on a weekly. This is cool too. So these chips are going to be important, folks, because if in fact the NDX is going to test its high and fail, as I expect, it's going to be the chips that do it. So the chips are coming in first. So the chips are actually going to give us the heads up before the chip sector is going to give us the heads up. AMAT has a high volume high, $60.89. We hit $60.18 today. Weekly basis, 72 million. Guess what? Same setup, which is really cool. Your first leg down in December, you had a $48 high volume high at 90. You did a counter trend bounce, you got up to 58, so you get up $10. You did that with 58 million shares versus downtown of 90. Fell apart again. Now it has a high volume low of 96. So the first high volume low had 90, next one has 96. What you can expect is this, where the confirmation is going to be, or would be, if in fact that's going to happen, is that you're going to test this high of the week of the 17th, and you're looking for less than 17 million shares, 72 million shares, and we'll see where they get it. And if you get it, guess what? That's going to be another indication that you're going south. And these chips, they kind of have it in spades, which is pretty cool because they both, NVIDIA as well, oh no, that was Lam, yeah, that was Lam Research as well as AMAT. Now let's go to NVIDIA, because NVIDIA is the monster in all these. This is the strongest one. So NVIDIA, same setup. This is interesting. You know what the difference is in NVIDIA? NVIDIA hasn't tested its first high volume low yet. 204. You're at 242. Put this back on a weekly. Same thing. That's sticking out like a sore thumb. The difference with NVIDIA is that it hasn't even tested its first high volume low of 204. It's going up to test the highs, and this thing is dying on the vine as it gets into higher price. So we start putting this together. You get Wednesday, Thursday. I suspect Thursday or Friday is going to be the number here. That's how it seems to be playing out. Let's go into the XLF, the bank and structure out here. XLF, we're up 13 cents. You're at 28.97. I don't think that's going to get to the high, but I do think we're going to go test that 27th high. 27th in the XLF would be 29.77. The XLE inside the energy market. Yeah, energy's dead, man. This is intriguing, man, because oil's still really high, but yet energy can't get out of its way. So the XLE up 18 cents, doesn't have any juice behind the move. We go into ExxonMobil. Same setup. Exxon's up 11 cents, down at lows. Chevron's a mover out here today, too. Yeah, it's only up 8 cents. That's a big number. So let me go look at Banker. Well, actually, J.P. Morgan first. JP's like trying to test its highs right now, and there's not a lot of buyers up here. The high is 17 million shares. You're going to do 8. Well, you're at 8.3 right now, so we'll probably do what you get about 25 minutes. We'll do. They can throw like 10 million shares in there. Bottom line, though, for the well, we'll go to Bank of America too. I know what we're going to do. No, we're going to go to Berkshire Hathaway, because Berkshire Hathaway is still the largest weighting structure inside the XLF. Yeah, and Berkshire doesn't look to me it's going to get to its highs either. So Berkshire is trading 204. This is the B shares. The high is 217. The high of the 27th is 213. I do think that 213 is going to get hit. What you do have with Berkshire, you have 2 separate high-volume lows. First one was laid out there, 10 million shares, 190. Second one was 3 days later, 8.9 million shares, 189. So that baby more than likely is also going to get tested. So when you start putting all of these together, what I expect you're going to see a little bit higher prices next couple of days, and then whatever's going to this selling inside the indices looks like it's going to be there in spades. Let's go over to Apple and take a look at Apple. Apple's trading right next to its highs, and it has been for a long time. If I put this on a weekly, where do you see this thing? You know, this has been up at these highs, meaning we're at 176, but let's say the first high was 174, which it was, 174.26. What you're going to see here is that the longer that we stay up here, the more probability is that you're going to have a fast and furious downtrend. The reason being is that we got the downtrend off the highs the 26th of January. The 26th of January, that week it went from 179 to 70. The next week it went from 170 to 160. The next week it went from 163 to 150. You've come back up, and the volume is dying on the vine. But I do expect that Apple's going to get tested, and then we'll find out once again, can it make it or can it break it? Stay right there, folks. Coming right back with some last 20 minutes of trading. That's what it looks like, right? Yeah. We get the Dow right now up 29, NASDAQ up 40, S&P's up 10. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have, let's take a look at some of these Dow stocks out here. You got American Express down 45 cents. Boeing is down 262. You got ExxonMobil up 6. Disney's up $1.35. GM is up 21 cents. You get Big Blue down $1.24. You get Johnson & Johnson off 152. Walmart is down 89. If we go over to Amazon, we take a look at Amazon. Amazon, folks, is at highs right now. Busting out once again. You're up $12.42. You're at $1,536, and it doesn't have the juice up here, but bottom line is that it's holding price. Netflix, NFLX, this is also one, this started taking off 2 days ago, and man, did it take off. So this was trading last Friday at 283. Right now, you're at 325, and the difference in Netflix, by the way, is that you actually get volume behind the move. This is a big number. This thing had price spread. Let me put this on a weekly for a second. Yeah, man, this got juice. This has juice underneath it, man. It's almost parabolic since December. I wonder why his. So Reed Hastings. Wealth went up like 47%. It was the biggest percentage jump in the market. But you can see why now when I'm actually putting this in December. This closed out the year at 185. So we just went from 185 to 325 in what, that's 4, 8, 10 weeks. That's intense. That, no doubt, is intense. Let's go over to Walmart. We take a look at Walmart. Walmart is having a hard time holding this 90 price point. That's off 109. It's already by its gap with a gap higher on numbers. This is on its way down to 79 bucks. Target came out with numbers. Numbers were pretty good. Bottom line, they're selling it off though. You know, Target started out lower this morning, got a pop up to the started out at 69, got a pop all the way up to 74, 64. And now what you're doing is that you're going into your lowest swing point with volume expanding. So Target's going to have a tough time here. Let me put this back in a couple weeks, couple years rather. Yeah, look what it's going into. What a trip. Okay, so let me put this back in 3 years. What you're going to see, it's pretty amazing actually. So Target's going into one of its first downdrafts from May of 2016. You know, it came off the highs, big volume off the highs, 38 million on the weekly, 76 million. It went back up there on 64 million. Then it couldn't handle it. Then the volume contracted dramatically to 34 million, 29 million, and now it's coming back down the other side. So, you know, Target, decent numbers, but bottom line, looks like it's going to have a problem holding a price out here. We go take a look at the, let's go to Rangel Resources. So Rangel needed a bid also. nothing heavy yet. So Wrangell, you know, had been one of the strongest gold stocks for years. We'll see whether it can, you know, get its mojo back on. But right now, bottom line, you're at 167. It needs a few big signs of strength. We take a look at Harmony. Harmony, bottom line, is an ABC structure on the way up. This thing is strong, big time. You're up 7 cents right now. You're at $2.28. When you take a look at this, this kind of looks like the gold market, you know, and this has a chance to really break topside. This has been consolidating since December of 2016. You have the juice behind the move, big numbers behind the move. Let me put this on a monthly so you can see how this is shaking out. It sticks out like a sore thumb how it came off the lows of February. So, you know, bottom line, you're at 229. What you have a game here is 374 up to 487. That certainly is a decent number. We go take a look at Gold Corp. That's a decent move today, up 49 cents. Let's go take a look at the Canadian dollar, because what's intriguing here, so the Canadian dollar is trading 128.92. And we've had some differentials. Okay, so that basically, yesterday you broke topside, you back down today. It's going to be interesting watching this one, particularly because what you have is this, is that this Canadian dollar start getting weaker when normally when our dollar is getting weaker, it's getting stronger. But that baby got hit pretty good when Trump came out and said he's going to tariff the steel and the aluminum. But we'll see whether, you know, whether Canada's going to get hit. Canada is our biggest trading partner in the steel business. The differential, let me go over the differential is important for the miners, because if, in fact, the Canadian dollar stays weaker, they will make money hand over fist. What had happened in the run from 2002 to 2006 is that, particularly in 2002 to 2005, is that the gold price went up really nice, but what also happened is that the Canadian dollar got so strong that the Canadian miners, their expenses went up dramatically versus what they get paid. Because you remember something, whatever country you're doing business in, most times they're paying the workers in that currency, and they're always getting paid in U.S. dollars inside the metals business. That's how that shakes out. So it's important what that differential is. And because mining takes so many people, their payrolls are really large. Like if we pull this up, you're going to see Gold Corp, 15,839 employees. Big numbers, right? And that's certainly not big like some of these others. You get Nico Eagle is 7,000. Now watch this. Watch when you get to South Africa. This gets really intense. Well, not that bad. 33,000. Let me see what Wrangell Resources has. 3,600. Yeah, it is their biggest. Well, it's not their biggest expense. I suspect it's between that and energy. That's inside the mining business. Those are the two big expenses. And of course, that means that that's as long as you find the gold. If you don't find the gold in your exploration play, that's a whole different ballgame. Let's go take a look at Franco-Nevada. So Franco-Nevada, royalty company. Yeah, this still needs a bid too. You know, it's going to be, this is going to be just, you know, really interesting watching out who and what equity is going to lead the gold miners. So if we go back to 2002, this is how this shook out. 2002, 2004 to 5, you had Gold Corp and Nico Eagle. Gold Corp was the first one to basically take off. That was Rob McEwen's company at that time. That took off. Then what ended up happening is Nico Eagle took over the leadership for about 2 or 3 years. But for the last 10 years, it's been Wrangell Resources. Franco-Nevada's always been good, right from the get-go. Franco-Nevada kind of fell apart, you know, about 2 or 3 months ago. Wrangell Resources also fell apart. So most times what you see, if in fact we're going to go, which I expect we are going to go, someone's going to lead. And we'll find out what that leadership looks like. We go take a look at the DAX in Germany. Now, the DAX in Germany, folks, and the FTSE 100 in the UK are going to give us a good heads up as to, number one, are we going to pull back down? And number two, how far are we going to pull back down? The reason being is if you take a look at the DAX broke down, number one. The DAX today broke down again. The DAX went from 12,259, closed out at 12,113. The DAX has a real problem getting back inside its trading range, and that is a monster heads up. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 3, Nasdaq's up 36. S&P's right now trading up $7. And I'll tell you, man, when the Pentagon spends some money, man, do they spend some money. So check this out. The Pentagon's Silicon Valley-based innovation unit awarded a $950 million contract to a little-known company. Listen to this. This is pretty wild. How do you award a $950 million contract to a little-known company? Now, here's the next line. With ties to Amazon. Last month, without all alerting senior officials in Washington that who are crafting the military's broad acquisition strategy to move defense data onto cloud services. The bottom line is that this is an Amazon company. With little explanation, the Defense Department announced Monday that it's reducing the award to Rain Cloud LCC to $65 million. That's a mind blower, man. They had an award of $950, and they're going to reduce it to $65 million. We are refocusing this agreement because it is in the best interest of the department, Navy Commander Patrick Evans, a spokesman, said in an email. Defense officials were not aware of the production agreement prior to being announced, Evans said, after a supersized award by the unit known as the Defense Innovation Unit. Officials asked for a pause and additional orders so the leadership could take time to better understand how this agreement fits into the department's overall cloud adoption. The large contract to RAIN fed concern among other contractors that the Pentagon is planning to give what could be a multi-billion-dollar contract for cloud services solely to Amazon. It's a mind-blower, man. Can you imagine? You wake up one day, have a $950 million contract. The next second, it's $65 million. Bottom line, well, it looks like Oracle and Microsoft have pushed for open competition with the awards of multiple vendors. Both companies are a member of the Coalition of Government Procurement. Stay right there, folks. Going to come back with the numbers after the close. We have the Dow Industrials down 25, NASDAQ up 31, S&P's up 5.5. We're going to be coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. March 6th. Beautiful thing, isn't it? Coming into spring. Accept others the way they are. You cannot change other people. To try to change them to fit what you want is like trying to change a dog into a cat into a horse. They are what you are. No, they are what they are, and you are what you are. Nothing wrong with any of it either. Market-wise, let's take a look at it out here. We had the Dow Industrials up 9, NASDAQ up 41, S&P's up 5. Gold contract caught a nice bid up $15.30, trading at $13.35.20 an ounce. Silver up 37 cents, $16.71. Had wide price spread, had the volume behind the move. That's what it needed. Light sweet crude, flat, $62.44. We're going to get the API numbers out at 4:30 this afternoon. We'll see where the oil is going. Now, what's intriguing is that the physical oil price staying high. XLE, ExxonMobil, Chevron, they're all low. They come off their highs, and they come off them quite a bit. That is indicating that this oil is going to go lower. The real question is going to be, are they holding this baby up to get Aramco IPO out in the next couple of months? 10-year note, flat, 120 even. 30-year bond, up 2 ticks, 143.05. What you have with both of those, folks, is that we had gone topside a few days ago. You pull back with light volume. You're going sideways. I suspect that in both cases they're going higher once again, lower yield. King Dollar. King Dollar gave it up. King Dollar came down 481 ticks, had 31,000 contracts. So you had expansion of volume on the way down in King Dollar. That's going after its lowest swing point. That's on the short term. On the larger term, you have a monster ABC structure on the way down. That is an 82.340 handle. The euro's trading at 104 to the U.S. dollar. The yen is out here at 106.18 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the S&Ps, let's take a look at them. What do you have? We're at 272 inside the SPY. I expect you're going to see this thing test out 278. We take a look at the Qs, the NDX 100. It looks to me like the Qs, the NDX 100, as well as the NASDAQ, I expect you're going to see it actually test the January highs. Last time that we went up on that big counter trend bounce that started on February 9th, we got to 170.73 in the Qs. The high is actually 170.95. It looks to me that we're actually going to make that level. IWM, the small caps, kind of like the same type of setup inside the small caps. What you have with the small caps is this. Small caps out here trading up $1.66. You're at 155.37. And bottom line is that the high of the 27th is 155.88. You're right at it. I expect that's going to go by that, and more than likely you're going to go to the lows of the high, which is about the 158 area. I want to go over to the DAX. The reason I want to, two different reasons I want to go over the DAX. The first reason is that the DAX had broken down. Bottom line, the DAX had got below its February 9th time frame. Bottom line, the DAX had come off its high of 13,560. That was January 23rd. We go down February 9th, you get to 12,003. You do a very small counter trend bounce to 12,600. Then what do? You break the low again. As we break the low, you don't break it with volume, but yet you have an expansion of volume. So what we did is this. Your first low had 181 million shares traded. Your second low had 124. Now, then we start going up with 113. It couldn't hold price today, and what I expect you're going to see out here today, we got to a price point of 12,259, sold off the whole rest of the day. It's outside its range, but what I want to look at right now, inside the DAX, because this just come across the tape that we're going to see this, let's go look at BMW and Mercedes. Okay, let's see. BMW. Let me pull this baby up. I got to see what this is. BMW. I want to look at this in Germany, too. Okay, so here's BMW. Okay, just curious as to what this is at. This is at 84 bucks. Okay, so this is off its high of 97. Okay, so this took a leg down a long time ago. It's still in a consolidation. Mercedes, let's see. Okay. Daimler Chrysler, let me pull up, oops. Okay, come on, 1 second. I gotta find this in Germany. Just give me 1 second here. Yeah, see. Sorry, folks. I got to find this. There we go. Oh, I got it. Okay, cool. So this has a oh, that's interesting. Mercedes is look at that. Yeah, bottom line, Mercedes is a private company. I didn't realize that. Okay, so this is why I was looking at both of those companies, folks. So you know, bottom line is that. Let's actually go look at a couple steel companies, too. So we take a look at U.S. Steel. Bottom line is that, you know, when Trump come out and said he's going to do the tariffs, bottom line, steel has been going higher. U.S. Steel looks like it wants to go higher. Nucor wants to go higher. So what you just had out here, you know, and the bottom line is that what has happened, so the steel industry is a $50 billion industry. He came out and said he's going to do it, but guess what? Nothing's happened yet. Because the first thing that the European Union had done is said that, okay, we are going to put, we're going to go after Harley-Davidson, which is, of course, where Paul Ryan is from, and we're going to go after Kentucky Whiskey, which is Mitch McConnell. So you get the leader of the House and leader of the Senate. That's where the European Union said, that, well, we're going to put tariffs on that. Well, this is what just happened, so check this out. So right now, Trump's having a meeting with the Swedish Prime Minister, and here's the quote. So this came across the tape, yeah, right at the close, 3 minutes before 4. So Trump reiterated his commitment to levying tariffs on steel and aluminum, saying the U.S. has poor trading conditions with other nations, including those in the European Union. When we're behind every single country, trade wars aren't so bad, Trump said at a press conference at the White House just now. The trade war hurts them. This is the number here. Trump said that the European Union has been particularly tough on U.S. products, yet able to sell its own goods, such as cars, to Americans. Trump warned that if they do impose, hey, stay right there. Be coming right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And if we do look at Daimler Chrysler, I want to thank one of the Tigers. Forgive me. It's instead of Mercedes, it's on the Daimler now. So Daimler Chrysler bottom line, that that high of 96, right now I traded 67. This has been a consolidation a long period of time also. But to get back to what you just had happening at the White House. So Trump said that the EU has been particularly tough on U.S. products, yet is able to sell its own goods, such as cars, to Americans. Trump warned that if, in fact, they put a tariff on the motorcycles and the bourbon in relationship to these metal tariffs, that he's going to put a 25% tariff on European car imports. So it's a wild one, folks. Bottom line, if that's what you get, there's going to be a lot of money made in buying and selling used BMWs and Mercedes-Benz. No two ways about that. In fact, yeah, there's no doubt about that. Pretty amazing. Let's go over to our man, Mr. Andy Heck, as we do each and every Tuesday and Thursday, folks. Don't forget, folks, Andy's got a great show here, 5 to 6 Eastern Standard Time, every Tuesday, Thursday. He also has 2 newsletters that you can take out, 30 days at money-back guarantee. The first one is the Technomental Commodity Report. That is his investment newsletter. That's come out once a week. He has the Daily Essentials, which is out each and every day. That is his trading newsletter. Now, the way that you do that, come over to our website at TFNN. You go to newsletters. If you like the trading newsletter, just go to trading newsletter. You see Daily Essentials right there. If you like the investment newsletter, go to investment newsletters. You can do the Technomental Commodity Report, or, in fact, bottom line is that you can do both of them. Andy Heck, what's going on?
Hey, Tom. How are you?
I'm doing great, man. Yourself?
I'm doing good. The other shares you should look at is Volkswagen.
Yeah.
Volkswagen is the other one. It's come off a little bit, but, you know, Volkswagen's done pretty well. After the emissions scandals. Shares are about 197 and change, just under 198, but they came off a little bit. They also have a plant here in the United States. In
oh, they all do. They all do. Right. So we'll see whether these things. What's intriguing, I thought, you know, is that, see, the DAX in Germany had already broken its February 9th low, and the DAX is in tough shape. So, like, when this just came across, you know, the tape is like, man, okay, you know, is there more than just Daimler Chrysler? And I'm not sure whether I got the right one up there. Daimler-Benz is the car maker, yeah. You know, but what's underneath that? Do you know what I'm saying? Because the DAX fell apart, man. I mean, the DAX didn't even do did a small counter-trend bounce, but the DAX looks to me like it's going to go down big time here. So
yeah, I think there's a lot of horse trading going on. He didn't sign this thing yet. I think there's a lot of horse trading going on behind the scenes. And if he can come out and say, look, you know, I'm not going to do it, but I got us a better deal, you know, he figures he'll be looking really good. So,
well,
you know,
I guess that
I think there could be a bluff and a little posturing here.
Yeah, I think the people that own those stocks, we'll see how they come out on the deal.
Yeah.
This is a money issue. You know, he can talk rhetoric all he wants, but this is going to be hitting people's pocketbooks, so it's going to be intriguing.
Well, it doesn't hit their pocketbooks until he signs it and the tariffs go into place. So we'll see what...
No, I'm talking about the people that own the stocks, Andy.
Oh, that came off here?
The people that own the stocks, period. Whether, you know, you get stocks that are going up, stocks that are going down because of the case, right?
Well, exactly, but that's about...
GM and Ford.
Right. Exactly, but the markets have been hyper volatile since the end of January. I don't think that's going to stop anytime soon, given what's going on. I think volatility is here to stay all over the place. As far as the tariffs are concerned, we'll see if he actually signs this. I'm not so sure he's going to. I think there's a lot of people within his own administration who do not want to see these tariffs in place, and certainly in Congress. So
right. Right.
It'll be interesting to see how it all shapes out. But at the end of the day, the volatility seems to be good for a lot of the commodity markets. Today we had the dollar, another failure. Let's see if the dollar goes down and tries those lows now, which I think is like a magnet for this greenback.
Oh, no doubt.
You know, I particularly like that silver kind of outperformed gold today. It's long overdue.
We needed it, no doubt.
That's a confirmation to some extent. We'll see how it, you know, follows through in the next couple of days. But I like the action in the precious metals here. You know, we're going to start having the markets focus on the March 21st Fed meeting. And there's pretty much 100% chance that interest rates are going up by 25 basis points unless something really crazy happens between now and the 21st of March. And gold does tend to come off, you know, going into those meetings where rates go up. But you know, this one is like, you know, this one's a gimme.
Yeah, and it's been a gimme for a while, right? I mean, that's the reality, you know.
So it's really the statement that'll move gold after that meeting, but I think it's done really well. It went up on good volume today. You have the gold stock indexes following it, and it kind of held where it should have held. Now, it did make a lower low on the year. That's something it hasn't done the prior 2 years, but I think this is going to be a year of heavy volatility. I do think we're going to see $1,400 on gold this year.
Okay, so let me look at this. So when you say we made a lower low,
we went down to 1303.60 on the April contract, which was lower than the 1309 at the beginning of February.
Oh, I see what you're saying. Okay, we're going to spike that swing point. Okay, right.
And that was a new low on the year because we closed last year on the April contract, at least around the 1309.90 level. So, you know, we did make a marginal new low back in early February. We made another little bit of a lower low, but it held pretty nicely, and it held this 1300 level. So I think that looks good. Interesting, platinum, palladium, not really following the precious, the gold and silver today. Very marginal gains over there in the PGMs. But copper doing well. And that's, you know, dollar-based. Copper's also been trading with the dollar, but we rallied back to around above the $3.15 range. And oil's been hanging in there nicely, Tom. You know, up at above $62.
Yeah, you know, and we're gonna have the API numbers out here. So let's take a look at this because, you know, so I mean, the large oil and gas integrated ExxonMobil, Chevron, they're
not doing well.
They're disgusted, right?
Right. They're not doing well. You know, the XLE and the VDE, the Vanguard Energy Index, those are the two I look at. They're trailing, definitely trailing. And the bottom line here is that you know, either they're going to have a latent move or oil, they're going to weigh on the price of oil. But one of the things I'm looking at here is this Aramco IPO.
Right.
Depending upon what this valuation is, if the valuation comes out high, Tom, we could see an adjustment in these oil stocks very quickly. And that would affect these indexes perhaps dramatically. So,
but here, the Aramco, that IPO is all about just buying oil. Is that correct?
Well, it's oil, but it's also refinery. They own the biggest refinery in the world.
Okay.
Aramco.
Okay.
You know?
Yeah.
So I mean, this is a multi-tiered oil. This is the biggest oil producer refiner in the world. They also have investments in refineries, even in the United States. So, you know, this Aramco deal is going to be a big deal on the valuation part. I just wonder how they're going to value the assurity of Saudi Arabia. That kills it.
Seriously. Stay right there, folks. Andy and I are coming right back. Our phone number is 877-927-6648. Dow Industrials finished up 9, Nasdaq up 41, S&P's up 5.5. We're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member, FDIC, and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Talking with our man, Mr. Andy Hecht. We're talking markets. We're talking commodities. We had the Dow finish up 9, NASDAQ up 41. S&P's up 5.5. Some of the commodities out here, folks. You had the silver contract up 2%, natural gas 1.8. Orange juice 1.4, gold 1.1. Cotton took a hit. That was down 3.2. We had sugar off 0.8. Wheat was down 0.4. And let's see. So any minute we're going to be getting those API numbers out. We'll get them to you as soon as they come out.
Cotton took a hit, but it took a hit from a higher level. It
got up to
86.60. Big reversal there. But a lot of these agricultural commodities, Tom, we have the WASDE coming out Thursday.
Okay.
They are going into this WASDE in, more volatile than we've seen them in a long time. By the way, grains are rallying before the first seed is going into the ground in the 2018 planting season. This is kind of the best start to the grain markets that we've seen in years. Now, it'll all be up to the weather here. But, the world is even more reliant on bumper crops from the U.S. this year because of the drought in Argentina and because of the lack of snow cover on the winter wheat crop.
And we're getting some wild weather, so you're going to bet on the weather. This is not a bad year to bet on the weather, man.
Big snowstorm coming to the East Coast.
Yeah, after, this is the second time. So check this out, folks. I mean, all you folks up in the Boston area, I know you know how bad it is, but this is crazy, Andy. I mean, this January 9th, they got whacked. I mean, it was like an ocean in the streets of streets of South Shore. And the bottom line, last Saturday, the exact same thing. You're talking about
whacked again.
And you're talking about winds 75 miles an hour. That's like.
But this one's going to dump a foot of snow. So this is going to be nasty too. I mean, the snow they can deal with better than the water.
Yeah.
But it's still. March comes in like a lion, and it is definitely a lion right now. And, listen, March, I remember living up in New York. March was always the worst month. We always got the biggest storms in March.
Yeah, that's funny. Because what happened, I know what you're saying, because you think you're almost coming into spring. You see the blue skies for one day, then all of a sudden, oh no,
Yeah, it's 70 degrees, and then it snows 18 inches.
Yeah, right. So here's the headline. Spring may be just 2 weeks away, but another round of heavy wet snow is set to descend on New York and the rest of the Northeast. The only people who might be happy are the skiers and ski resorts. Yeah, you know, because of that's been a problem out west, the ski resorts,
Yeah,
right?
it has. Well, we got some late season snows.
Okay.
Utah has over a 100-inch base now, so you know things have gotten a little bit better. It was bad early in the season. It was kind of dry. So we're waiting for these oil numbers, which I think are going to be important this week.
Okay.
You know, oil's kind of looking for direction. It's looking at the oil stocks and saying, ooh, this doesn't look great. It's looking at the Brent premium, which has been evaporating. It's looking at the processing spreads. Now the refineries are going into maintenance periods, so they haven't been that strong.
So the maintenance, so they're going from what, winter to summer, right? Is that what
they go from heating oil to gasoline right around these days. So you should see some strength in the gasoline crack spread compared to the heating oil crack spread, but both are going down, which makes sense at this time. It's going to be very interesting to see what this week's inventories were as of the first report of March. I think they'll have a lot to do to drive the price of oil over the coming day.
Okay, so let's see what we got. We get the first report. Oh, good, we got them all here. 1 second, I'll pop this over here. So we got crude inventories increased by 5.66 million barrels last week. Cushing had a 790,000 draw. Gasoline was minus 4.5 million draw.
It's a big draw.
Yeah, distillate was plus 1.49. So let's see. Crude build would be the largest since January if the EIA data confirms it. You know, so Cushing.
That should push oil down a little bit, no question, especially with the oil stocks so weak.
Yeah.
So we'll have to wait and see. The gasoline draw is big. I mean, that'll temper it. But 5.66 million barrels, I don't think the market was expecting it that big. And that is going to move oil tomorrow. But we'll have to see what the dollar does, because if the dollar slips below the 89 level, Tom, you know, that's going to work the other way.
Yeah, now that, you know what's so intriguing here? I'm glad you just brought this up, because, folks, what should be happening here, well, maybe that's why it is happening, is that the dollar is weak, and maybe that's what's keeping in oil up, actually. Yeah, that would make sense, right?
Yeah,
okay.
Sure, all commodities. I mean, it's good for all commodities, no question about it. Listen, it's really helping the grains, I'll tell you that.
Yeah.
Because what you're doing is, you know, you're getting a lot of exports out of inventories for corn and soybeans and soy meal to other parts of the world, because they're all worried about this Argentina and Brazil stuff and the crops there. So, you know, the dollar is definitely the key here. And I got to tell you, I look at this chart, and to me, just another failure. Man, we might have rallied above the technical level there and made a new high for a short term, but it was a very short term.
Yeah, for literally about a half hour. What Andy's talking about, we got to 90.885, but then we closed out, folks, at 90.281. That was on Thursday. Thursday.
Yeah. And we're seeing, I mean, since January 2017, this thing has been a one-way street.
Oh, yeah?
So 88.15, key number. We break that 88.15. I think we could get down to 86 here. So,
listen, there's not.
That'll put gold. I think that puts gold at 1,400.
No, I agree. There's what you have if you're watching Tiger TV, folks. What you're going to see, there's nothing in between here and $70. $79. You know. And that's that's when you bring it back to 2014. Now, what is holding it up right here, and has been for 2 months, is the highs of 2008 and the highs of 2010. But once you get by 88, like 88, 890, 89, that's what's, you know, the highs of those. You get by that and see it, man. This thing is.
I'll tell you what can do that, Tom. He signs the tariffs. I think that he signs the tariffs, the dollar plunges. That's my opinion.
You want to see the last time they did it? Watch this. I wasn't even paying attention to that then, but I had just started the gold report, and I started it when the dollar was 121, and that's when Bush signed it. Here's 2002.
It went to 70?
Well, it went nonstop, folks. This is what's crazy. It went from 120 without a break to 84.
Right.
It's like, okay, so just to give you the texture, January of 2002, it was 121.
Right.
February of 04, it was 84.
Right.
Pretty intense, man.
Yeah, that's intense.
The cool thing is,
I think 78 is where it heads, actually.
Oh, yeah, well, this, you know, then we hit, I mean, the low thus far is $70. That was the lows of 2008.
Right. there'll be some support at 78 because that's
there
what we
should
came
be. There better be.
2015. Well, yeah, I mean, no question about it. But listen. I think that it hinges on that. It does. I mean, the Fed is important. If they take a hawkish stance, that might give some support to the dollar. But the other thing, Tom, that's also leaning on the dollar here is sooner rather than later, the ECB is going to have to act. And negative 40 basis points in an economy in Europe that is not, you know, in the dumpster like it was. They have to act eventually, or they're going to really spark inflation over there.
And, you know, if we bring the euro up, but you can see the euro's at 124, and then this thing...
It's going 130.
It's 139, looks to me as game. I mean, your swing point there, yeah, it's 139. 139 is the high of May of 2014.
Amazing.
Pretty wild.
Well, lots of volatility ahead. That's what it's
No doubt. Okay, thanks so much, man. We look forward to the show at 20, 30 minutes. Stay right there, folks. I'm coming right back. We had the Dow finished up 9, NASDAQ up 41, S&P's up 6. We'll come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know, you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now finished up 9, NASDAQ up 41, S&P's up 9. We take a look at the volume stats out here. We had in the NYSE, folks, you had 835 million. Shares out here today, NASDAQ Composite, we did 2.1. Now, let's go back. I want to go back over to the DAX because the DAX and the FTSE 100, folks, are giving us the signals that, number one, you're going to come back down to the February 9th level, but the way the DAX is trading, it's actually saying we're going to go lower. So if we take a look at the DAX, what you're going to see, the DAX in Germany, 13,596 is a high. So you're basically 1,300 points off that high. We take this and we put this on a weekly, what you're going to see, this is where this gets really dangerous, because where we're at, inside the DAX, you're back to where we were in March of 2017, so a year ago. Now, it's breaking this area, which is the 11,868. We hit 11,830. That sets up a run down into the 10,800. Let me put this back. I'm going to put this back. Yeah, see, and this is a nice chart, man. The bottom line is that, you know, if we go from 2008, you know, and say, okay, you know, bottom line is that this had huge expansion. We went from 3,500 up to 13,000. So you went up 10,000 points. Okay, so you almost went, what, 250%. You are back inside the 12,300 range, and that's setting up. Let me put the volumes on this. So that's setting up like a 9,800. That's going to be a big number, man. And what that is where we had broken topside January of 2015. Okay, so now we're going to go to the FTSE 100, because the FTSE also broke this level. We take a look at the FTSE 100. That was up 30 bucks today. You're at 71.46. This is off the highs. Now, both of these indices, too, by the way, folks, did not get the counter-trend bounce that we got. They bounced. I'll show you what they bounced. So this went from 77.92, let's call it 78, down to 7. You bounced up to 73.26. It came barreling down again, tested the low, rejected it. Okay, so this is where the difference is. This is pretty cool. So the FTSE does have support at this level, and where the support comes in, let me put this on a monthly here. Yep, that's good support, actually. Okay, so now you're going to have two different things here. You're off the highs. It's trying to make its way back into the lower range. Now, that lower range, once you're into 6,800, there's quite a bit of support. You know, so if the FTSE ever breaks down, get out of the way, because we've traded here so long. The FTSE traded at the 68 to 7,000 level from May of 2012, 2013, over to August of 2015. That's a long way. And most times, when you do something like that, you just don't break through that area. That area, interesting though, that area is also the highs of 2007. So that's going to be a big heads up, man. It's going to be a huge heads up. So 67.51 is your benchmark there. The reason, because the first time we went over that, it failed. Stayed up there, though, for a year and a half. Then the FTSE went from 7,100 down to 5,500. Broke topside again February of 2016. It's going to be important to keep your eye on that. Let's go to the CAT. Let's see if the CAT 40 in France is set up the same way, in Paris, rather. Yeah, set up the same way. Now, the CAT 40 got a larger bounce than the DAX did or the FTSE. That being said, we put this back. See, that was, so this never made it to its 2007 high, so this is definitely weaker. You're back inside 52.80. That sets up lower prices. You know, we start putting those together. That DAX tomorrow is going to be a big number. The reason being is that you had the DAX today, as well as the CAT 40 today. They moved higher. They gave it up on price, and I will get the volumes a little bit later. I don't have the volumes yet, but that is saying that they want lower price. If we do go over to the oil market, we got those oil numbers. You know, bottom line, oil hasn't moved that much. The USO went from 12.57 to 12.54. If we actually take a look at this oil market, though, what you're going to see, what I expect now, we're going to get the EIA numbers out tomorrow morning. They'll come out at 10:30. What this contract did out here today, we're on the April contract. That April contract had a high of $63.28. You're at $62.32. And this, yeah, that bottom line, this wants lower price. You know, last time we were up here, you hit a high of $64.24. That was the 26th. You came off that with big volume. We came off with 768,000 contracts as well as 831. Today, trying to get into that level with 606, couldn't handle it. That puts game on, again, for $57.90. So I expect what you're going to see. You're going to see some action inside that oil market tomorrow. And as we've been talking about last month, you know, when you look at Exxon and Chevron, it's like, what's wrong with these? Exxon and Chevron are trading at their February 9th lows. The high of the low was $76.48. Exxon is at $76.18. So that can't get away from that low. Chevron, that had quite a day on the 9th. Holy cow. No, Chevron, they got smoked on the 5th. On the 5th, Chevron went from 118 to 108. Chevron's trading 113. And what it did out here today, it got to 113.85, couldn't hold, no, it got to 115.52. Couldn't hold price, only at 7.9 million shares, going into 15, couldn't handle it. This thing's going after its lows again. And if we do go back to 2014, when, you know, oil came down hard, you're going to see that it was the XLE and Chevron and Exxon that did give you, you know, basically a good understanding that these things had come off the highs first, and they come out. It's 2014. 2014 right there. Let me get this thing closer. Okay. What you're going to see is that, you know, Exxon was at 104. That came off the high and came off the high pretty quick. You know, we went from 104 down to 66. And let's see, the week of July, beginning of July, and I believe that's when oil actually started too. So maybe it's a little bit closer than I thought. Let me just pull this up. So that was the first week of July of 2014. Put this back on a continuous contract. Yeah, no, it did give you a heads up because what happened is that oil stayed up there until like the end of July. It gave you about a month. That's what it did. It gave you about a month. That's the real bottom line. You stay right there, folks. We'll be coming right back. We have the Dow Industrials finished up 9, NASDAQ up 41, S&P's up 6.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we get a question that, if Trump does sign the tariff bill and the dollar drops, wouldn't oil go a lot higher? So I brought this back to 2002 because that's the last time that we had a tariff bill, and I don't think that pushed the dollar the whole way. But bottom line is that the dollar went from 121 down to 70, right? And if we take a look at oil there, what oil did, oil was $27. It did go up to 39. Then it came back down into 26, and then it kind of leveled out again at the $36. So yeah, it did. When you take a look percentage-wise, that did go up quite a bit. I think that's going to be the battle. The battle is going to be, the question is how far and how fast the dollar go down, because that should keep a bid under oil. That being said, though, ExxonMobil and Chevron and those other oil stocks, that is telling me that maybe the new deal in oil won't be $60 and be down to 50 or 45. Because you remember, when you do take a look at oil, this thing is up incredible in the aspect of where we went just the last 4 years. You pull this back. Look at this. I'll put it on 3 years. Okay, so 3 years ago, 2016, we're at $26. You're at 60. We consolidated out at 42 for a long period of time. So maybe the consolidation goes down 55 to 42 or something. What does happen, which I like trading oil stocks, and the reason being is that they trade for long periods of time in very large consolidations. That's how I like to trade. What I don't quite understand, and this was really crazy, when you get like an ExxonMobil, right? You're talking an equity that takes in, $304 billion a year. A billion. So what that's, it's almost $1 billion. It's 900 million a day. That's pretty intense. And so when you see something like that getting hit, it's like, okay, man, bottom line, lower prices are coming at us. Because when you take that kind of gross revenue in, it's saying quite a bit. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. Man, Mr. Andy Hex coming up with a great show for you. Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.